Hey all, my name is Paul Borosky, and I am the owner of Quality Business Plan, as well as the author of How to Write a Business Plan in 10 Steps. And what I'd like to do today is address some issues with financial projections in a business plan. Specifically, what I want to do is show y'all or explain to y'all how I structure my financial projections. So when a reader goes through it, an investor or a loan officer, they go through the financial projection section of my business plans. They actually understand what's going on with the business number-wise, and they're able to make a more informed decision based on the structure that I use. For example, most entrepreneurs, when they do the financial projection section of a business plan, they're going to give the reader a 12-month projection for revenues and costs. Then they're going to kick it into a 5-year projection and also include a balance sheet. However, what is missing in the financial projection section is an explanation of where these numbers came from, how they're aligned with, your thoughts and ideas, which products you're going to be selling more or less of. There's no foundation to the financial projection section. And when you lack a foundation for your financial projection section, you introduce risk into your business because there's a lot of unknown. So what I have come up with is a structure and a strategy that I have found very effective with not only just conducting and getting your numbers together for your financial projections, but also presenting it in a usable and understandable manner. So that's the purpose of this video, is to kind of explain to y'all how I structure my financial projection section of a business plan to make it understandable for the reader. All right, and before we get into that, let me give you a little bit about me, and then we're going to talk about you and your financial projection structuring needs. I am a professional writer. I write specifically business plans. I love to write books, and also I'm a ghostwriter. So if y'all need some writing, please, feel free to reach out. Here's my number. Here's my name. Send me a text. Give me a call. Send me an email. Love to chat with you. Also, educational background. I am an adjunct professor for finance and for business, so I do have some educational experience supporting my thoughts and ideas on how to structure a financial section of a business plan. All right, so without further ado, let's go ahead and dive right into it. First and foremost, anytime I do a business plan, I don't care if it's just the financial projection section or the whole darn thing, I'm always going to start with a title page, and usually it's going to be the company's name, or it's just going to be a picture of the logo of the company. Whatever the reader wants or the client wants is what I'm going to start with, but never just go right into the table of contents. Give them some kind of a title page. Next is going to be table of contents. When you do your financial projections section of a business plan, make sure to have a table of contents. And the structure that I use is going to be my financial assumptions. Then I'm going to go into the profit and loss, the income statement, and then the balance sheet. And I'll explain all this in just a second. So make sure you've got your table of contents section. Next is going to be your financial projections section. So what we've done is we've introduced it with the title, we showed the contents. Now we're going to go ahead and start introducing the financial projections. We're not just going to throw in the income statement, throw in the profit and loss, and hopefully they're going to understand it. That's not going to happen. So when I do my financial projections section, I'm always going to start off with a highlight. Here is what we anticipate the revenues to be and the costs to be, and here's what the net profits are going to be, and here's how it's going to grow over the next 5 years. I'm going to give a real nice, short, succinct summary of the findings just to let the reader know up front, here's what to expect at the end of the road or end of the story or at the end of the financial projections. The next thing I'm going to do is I'm going to introduce my assumptions section. And the assumptions section is just to tell the reader my thoughts and ideas as to what I predict for my growth rates, what I anticipate for my tax rate, how much I anticipate for funding, how much is going to be my starting balance. The reason that I give assumptions is because I've been doing this for a long time, creating financial models and putting together business plans. Not once have I ever been right with a financial model or financial projection. I don't know what I'm going to have for lunch tomorrow, let alone know how many business plans I'm going to sell tomorrow or next week or next month or next year. It's not possible. So I'm trying to convey in my financial projection section my thoughts and my ideas as to what I think I can accomplish. And in order to convey my thoughts and ideas and have them to have some grounding, you need the assumption section to tell them where your head is before you introduce your financial projections. The next thing I'm going to do is I'm going to go ahead and introduce what my daily sales are. I'm going to say, all right, as for this right here, breakfast ticket. So this is an example of a restaurant, a breakfast restaurant. I'm going to tell the reader, I anticipate having 45 customers in on a daily basis for breakfast, 55 customers for lunch, and then 70 customers for dinner. Average price is going to be about $12, and my cost is going to be about $4.20. These are averages. You don't want to go in and say, I'm going to have 32 customers and then 15 customers, and it's going to happen, on Monday, and then 45 customers on Tuesday and 32 customers on Wednesday. You don't know. But once you start putting this in terms of averages, then you're letting the reader know you don't know, and you're acknowledging that, but nobody else does, and you're not trying to pretend that you do. So set the reader's expectations by using averages and just put the numbers up front for your first day of sales. And then from there, use growth estimates to kick out your first day of sales into 30 days, and then from your first month to your first year and so on. But at least you now are able to convey to the reader the starting point of your revenues. If you just give them a profit and loss, they have no idea where you're starting. At least we're giving them a starting point here. The next thing we're going to do once we get our daily sales is we're going to tie in some of our costs. And I'm going to do that on a monthly basis. I'm going to tie in my monthly labor, and I'm going to go ahead and tie in my monthly fixed costs as well. And again, I also always use the word initial monthly labor, initial fixed costs. This is the starting point, and then I'm going to use growth rates later on down the line to go ahead and kick out my monthly projections to an annual projections and then yearly projections. But again, I'm giving them a starting point. I'm not just, here's where I started, and then what they'll be able to do is see how it grew in the financial projections. So again, it's a piecemeal. I'm feeding the reader piece by piece how I'm putting these financial projections together. Once I set the stage for my daily sales and my monthly labor and my monthly fixed cost, then what I'm going to do is I'm going to kick this into my profit and loss statement, but I'm not just going to put 12-month profit and loss statement in one section. I'm going to break it into quarters. So the way that I've done it is profit and loss year one, quarter one, month 1, 2, and 3, and then I'll summarize the quarterly findings right here. I'll do the same thing for the quarter 2, month 4 through 6, and then quarter 2, and then quarter 3, month 7 through 9, quarter 3, and then quarter 4, month 10 through 12, and quarter 4. And then finally, once I've set the stage for my monthly profits and my monthly revenues and my monthly cost, I can then show my income statement, which is going to project everything for 1 year. So in this example right here, we're starting with revenues 1.4 million, and it grows to 1.7 million. But if the reader was just introduced to this information here, they have no idea where you came up with these numbers. If you start by giving them a piecemeal, here's what the daily revenues are going to be, here's what the monthly costs are going to be, here's what the month 1 is going to look like, here's what quarter 1 is going to look like, and quarter 2 and quarter 3 and quarter 4, you're building them up and you're showing them where these numbers are coming from, and it's accumulating in your income statement for the projection. And then the next thing, what I'm going to do after I hit my 5-year projection for the income statement, I'll then introduce the balance sheet year 1 through year 5. And once I'm done with that, then we're set, ready to go. This is a real nice, sweet, succinct projection following a specific strategy to let the reader know where these numbers are coming from, how you're coming up with these numbers, where they're going, and what is going to accumulate with at the end of the day. So hopefully this information was helpful, and if y'all are looking for a little bit more information on some financial projections, whether you need a template or whether you need some help creating your own financial projections, I do financial projections for clients as well as write business plans. So feel free to go over to my website at qualitybusinessplan.com/financial projections for a business plan, and you can go ahead and download some templates. There is a fee for it, or you can contact me on that website, and I would be delighted to help with your financial projection needs. As always, if the video was helpful, give me a thumbs up on YouTube, and have a fantastic day. Thank you.